Hi guys, I'm Chris.
I'm Jimmy.
And we are the Two Stocky Guys.
On this channel, we invest $1,000 into the stock market every week. So we purchase a stock and then the following week, we talk about why we bought it, how it's going. This is not financial advice in any way, shape, or form. Okay, so Chris, last week I bought Devon Energy.
All right.
Let's look at the stock and sort of how bad the stock has been doing since I bought it last week.
All right.
In the last 6 months, we see that it kind of topped up in the mid 70s and sort of now it's the lowest it's been in the last 6 months. No surprise, my investment last week has lost money. Also, while we're on the charts, let's kind of look at their dividend. So they pay out a fixed dividend as well as a variable dividend. Their fixed dividend is 20 cents every quarter, which is not much at all, right? And then they have a variable dividend. That means that if they're making extra money, they pay it off to the shareholders in a variable dividend. I think last year they were averaging about like 9% annual dividend per share, which is
a pretty hefty dividend.
Yeah,
I mean, anything over 5 I consider to be a pretty good dividend, so they're getting almost into double digits there, which is really nice.
So let's talk about a few reasons why I thought Devon was a good purchase, right? Probably not at the price I bought it. I wish I wish it was a little bit lower. But there were a few things that I liked about Devon. So one is I think the dividend is really nice, right? So I think the fixed dividend means that you're always going to get something every quarter. And then the variable dividend is just like a bonus, right? So the good thing about that is that the variable dividend means that if the company is not doing that well, they're not going to strain themselves to have to give the dividends to the shareholders. Next thing is that oil companies in the US, and I think actually probably a lot of oil companies, nowadays they're very incentivized to prioritize free cash flow and profits over growth and expansion. There's pros and cons to that, obviously, but I think that's, if you're thinking about wanting steady cash flow, especially steady cash flow now, these companies are, that's what they want to.
Which makes them a very profitable company. They're not as focused on growth, so they're focused more on turning a profit as opposed to like a lot of the tech startups where they're focused solely on growth and make basically no money or even have negative money.
Right. Let me see. The next thing I liked about Devon is that they sort of have a 50-50 mix of oil and gas, right? So say what you will about oil prices going up or down in the future. Gas prices are ridiculously low, right? They're sort of as low as they've been in a long, long time. I think the risk for gas to go higher is probably better than the risk of gas going lower in the medium to long term. Another thing that is good to consider with these oil companies is that the U.S. Strategic Petroleum Reserve, the SPR, is sort of at the lowest level it's been since like 1980s. Biden in the last year tried to keep our gas prices at the pump low. Basically, he did that by unleashing a lot of oil from our reserves, and they have to fill it up, right? At some point, they have to fill it up. Okay, so Chris, you want to talk about the cons about Devon or oil companies as a whole.
Right. So maybe some of the cons that would be associated with buying energy companies is that they are kind of going down right now. I mean, we looked at the share price earlier, and it is kind of on the downturn at this point, which could be good. You could be buying at a discount, but it could also keep going down. Like our investment at this point has gone down. So it might be something more to look at in the long term, and you could buy it while the price is falling and get a really good price on the stock. So just something to evaluate there. And then another con that you might want to look at is it's not a growth-focused stock. So if you are investing for retirement, if you are investing for the long term, it's probably not the best thing to buy. It is more of a dividend-focused stock, so if you're focusing more on like maybe the next few years or you want to have some cash flow, if you're trying for financial independence, retire early, then it would probably be a good stock for that. So just kind of figure out what type of portfolio you want. Not necessarily a pro or a con there, it's just going to depend on what your portfolio is built for. And then maybe some other cons is oil's probably kind of had its heyday like in the 80s. We're starting to switch to electricity for a lot of things, a lot of cars, buildings.
Right, and people want their electricity to come from like solar energy, right? Or wind turbines or something, right? Or basically anything else that's not fossil fuels.
And at this point, those are expensive, but as they become cheaper to produce and cheaper to use, that's going to make electricity much more cost effective than gas, which is further going to decrease how much gas we use in the future. Now, at this point, we do still have to run ships off of gas. We still do have to run airplanes off of gas. So it's going to be around for the next few years at the very least. And I could see some of these larger companies probably shifting their focus more away from fossil fuels into energy. So there's not really any indication specifically that Devon is doing that at this point, but I could see them probably making a strategic play like that because I don't think that they're just going to die out when fossil fuels start to go by the wayside a little bit. Yeah. More of not a long-term play, definitely. I would say it's something that if you're looking for cash flow, it would be a good play for you, but maybe not long-term growth-wise.
I think like a lot of really, really large investment funds, right? Like retirement funds, they're not buying oil stocks, right? They're buying like tech, they're buying like renewable energies. You're probably not going to get a huge upside swing, like let's say like chat GBT, right? Or like AI, right? Like this new thing. It's like, oh, everyone just like rushes back into tech. You're probably not going to see that, so much in the oil and gas stocks, right? You might see it in like renewable energies, right? Like solar stocks, wind turbines, geothermal, right? Like if there's like major breakthroughs there, I think a lot of investors will dive right in. Oil and gas stocks are just not cool. They're probably not going to like ever end up being cool, right?
Yeah, doesn't seem like it.
Right, yeah, they're just going to be more and more uncool. So some of the cons that I thought were specific to Devon Energy is that it's only in the U.S.
Right.
60+% of their production is in like one area, and like that area is eventually going to dry up at some point. And then sort of like being in the U.S., we have like high labor costs, high production costs. So so I think that is something for people to consider, right? It's not as well, I think, globally diversified as like an Exxon or a Shell, right? These like really, really larger gas and oil companies are much more diversified, outside the U.S.
Right. Yeah, and you could look at that as a negative point probably from the price standpoint, right? It is more expensive to hire people in the U.S.
Right.
You kind of have a little bit smaller exposure to what oil fields you can use at this point. I mean, it could be for a positive to someone that wants to invest in the U.S.
Right.
If you feel like investing in the country is something that would be good for you or good for the country in the long term, then this might be a better option than something with more international exposure. And then also, we do have a more highly regulated oil and gas industry here. So if you do have ethical concerns about oil and gas, like you would prefer energy because you want something ethical, this would probably be a better oil and gas company to look at just because they're inside the U.S. So they might have higher ethical standards than someone that's going outside the U.S. to get a cheaper labor market or something like that.
I thought this was a good start to the Stocky Guys portfolio. Tech stocks, I know that recently we had the whole big AI thing, like everyone's like really big on AI stocks. But I think with the raising interest rates, this economy, which really don't know, recession, no recession, I just think that oil's a safe play. And I agree, it's a defensive play. I'm not expecting this to like 2x in the near term or ever.
Right, yeah. Yeah, I would agree with that. I mean, I would say that the energy stocks at this point are a Honda Civic. It's definitely reliable, but it's no Lamborghini. So you're gonna be getting a good return. You're gonna be getting a safe investment, and like I said, not growth focused. So for me personally, I do invest in some energy stocks, not Devon specifically, but I have a couple others in there because I am focused more kind of on cash flow in my personal portfolio. So for me personally, I would say Devon is probably a pretty good buy. I mean, I think the stock price is pretty good right now. I think it's going down, and I think it will come back up. So me personally, I would consider it a good buy at this point. I mean, I would like a little bit better price, but I mean, I would always like a little bit better price.
Right.
Yeah.
Well, we invest $1,000 every week, guys. So we got to put our money somewhere. We got to choose something every week. If you guys like our content, please like and subscribe, and hopefully, follow us along, and we'll see how our stock picks do.
Yep. Tune in next week.